Canadian retail landlord Riocan releasing third quarter earnings. The company is reporting record occupancy. It had net income of almost 97 million in the third quarter, up from a loss the previous year. However, the company has been cutting its headcount. Let's bring in Jonathan Gitlin, CEO at Riocan Real Estate Investment Trust.
Andy,
great to see you.
Great to see you. Happy Taylor Swift week.
Taylor Swift, she goes over my head. It's not my bag.
Well, I got to tell you, you're in the minority.
I know, yeah.
Good time for Toronto.
It's going to be big, yeah.
Yes.
So record occupancy, that's amazing. You hear a gloomy forecast for brick and mortar, but you've never been so full, your malls?
Yeah, our shopping centers, they're all unenclosed. A lot of them are necessity-based, open-air shopping centers. The demand for them, Andy, is very high. You haven't had any new supply being built in Canada, particularly in the bigger markets like Toronto, in the last decade, and you're really not seeing much more being built right now. So it means that the space like ours that is available, it's in high demand. So we're definitely full, and we're having trouble keeping any space that comes available.
So you say unenclosed, so you're not like a giant box like the Eaton Centre or Yorkdale, for example?
No, I mean, although those are wonderful shopping environments, we focus more on unenclosed shopping centers in urban environments like The Well, which you and I mentioned briefly before the interview.
Yeah, just down the road here, a pretty incredible mix of retail and residential with giant walkways. It's a bit like Game of Thrones in places. It's like a castle.
Well, it's certainly like an extension of that King Street West downtown Toronto neighborhood. We've got a lot of different settings in there, a lot of different textures, and it feels, even though it's only been there for a year, it feels like it's been there and authentically a part of the city for a very long time, which is exactly what we wanted to curate.
When you say unenclosed malls, I guess one advantage is people can drive right up to the store, and that's dear to the North American heart.
Well, for sure. I mean, it gives you a lot of convenience if you're a shopper, and it's also a very cost-effective way for a tenant or retailer to operate, because you're not paying for a lot of the expenses of heating a common area or security for a common area or things like that. So the fundamental business model behind having an unenclosed shopping center, it is certainly great for the tenant to get its goods through easy delivery through the back loading modules, but it's also very inexpensive for them to operate relative to a larger enclosed environment.
I never thought of all that. Now, a lot of people have been interested because you've kind of put a toe into condo development. In some of your properties, so building retail and condos, people are concerned about a glut in the condo market. So how vulnerable are you there?
Well, I don't think we're very vulnerable, Andy. I think we've got some condo developments that were just a byproduct of us having really well-located properties. We ended up getting them rezoned to get them to a higher and better use than just retail, which only took up, say, 25% of a land holding. And in certain instances, it was best suited for condo buildings. And we did that as part of mixed-use development. So we do have condos that are currently being completed. And for us, most of these are part of mixed-use development, so they're very much in demand. They're also, a lot of them were sold at prices that were well before the peak of the market, and therefore they're still below market pricing. Moreover, a lot of the people who've committed to close on these condos, to buy these condos, well, they're subject to purchase agreements, so they need to close, but they're also subject to deposits that were quite sizable that they've put in place. In some cases, in most cases, it's about 19% of the overall purchase price. So we don't see a lot of the people walking away from these properties. And so we feel we're in a pretty comfortable position there, and we feel confident in bringing in that revenue that we had forecast.
You've scaled back your condo plans, though, I believe.
It's never been a fundamental part of our business. It's always been ancillary. It's been part of, again, if we were able to get zoning to put mixed use, sometimes putting apartment buildings or rental buildings there would be too much absorption or too much of them if we only did rental. So we would often complement it with a condo building. And that was, again, as I said, an ancillary part of our business, but it's not core to Riocan. We focus, as we said before, on necessity-based retail.
When you are remodeling a property or building a new one, what about parking? Have you cut back on the amount of parking you provide in an era of rideshare and people trying to use bicycles and stuff?
Parking's still a fundamental part of the shopping experience.
Right.
So in a lot of our conventional shopping centers, we still have a reasonable amount of parking. That being said, a lot of our properties are located on transit, which makes the need for parking a little bit less acute. But it is still a part of everyday shopping experience to drive your car up and go into a shopping environment. But it's becoming less and less important as other means of transit are available in places like Toronto, Vancouver, Montreal, the places where we own shopping centers.
Have you done much about electric vehicle chargers? Have you put them in, or have you seen demand for it?
Sure, we do. We have put in EV stations in a lot of our properties, and that's a growing part of our business. It's a great partnership that we have with a lot of the EV charge providers, and we think it's the way of the future. We think there's a lot more people converting over to at least hybrid cars, and certainly some to full electric cars. As you said, Elon Musk is taking over the world before, so he's definitely selling a lot of electric vehicles.
I know Bloomberg, saying he's sitting in on Trump's calls with international leaders.
It's a remarkable time that we live in.
Yeah, just got to leave. The Competition Bureau, as you know, is looking into competition in the grocery food retailing space and said they have demanded information on these property rules that essentially say that if a food retailer takes a space, another food retailer can't be nearby. Now, obviously, you would have can you comment on that? I mean, these rules have been pretty common in the industry.
They have. I mean, a lot of our leases have built-in restrictions in favor of one tenant over other uses. And we've been asked about this a lot, Andy, as you can imagine. And we're not in a situation where we would go and put a Loblaws next to an existing Metro, because that's not good business. That's too much grocery, and it would also alienate Metro if we did that. It helps us around the edges. I think there's certain retailers that are cut off from operating or selling ancillary, food. If you're a pharmacy, for instance, and you want to sell food, but there's a grocery store in that shopping center, sometimes you're restricted from doing so. I think this will open the channels to allow some of those users to sell a more fulsome offering to their visitors, and I think that's good for everyone.
Give us an idea before we let you go. What will the unenclosed mall of the future look like? How will it be different?
Well, I don't think it differs much, and I know this is going to be a boring answer for you, Andy, but what we provide is necessity-based retail, and that means that fundamentally you've got a lot of the users that were the same as they would have been 20 years ago. Grocery stores, liquor stores, dollar stores, some clothing retailers. These are the tenants or the foundations of what makes our society tick, and I think we're happy to provide those types of uses, and I think we'll continue to provide those uses. Now, the way in which they operate, that differs. And if you look at the way, again, a store right now is not just used for conventional shopping where you go walk down the aisles, pick up the things you need, and then leave. It's now used for things like click and collect, or sometimes retailers will use these stores as almost distribution centers where they'll deliver from these stores to the high demographic neighborhoods that surround them, or certainly in Riocan's case, surround them. So I think the uses within the stores are changing and evolving, but that's what retail is. It always evolves.
Jonathan, thanks very much.
Andy, thanks for having me.
Jonathan Gitlin, CEO of Riocan Real Estate Investment.